Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems from the digital study guide for Chapter 12, the Group B problems. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help you if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. All right, so we're working on problem 41 here. And it says here, calculate the various ratios for analysis. Get my pen. Assume you are purchasing an investment and decide to invest in a company in the home remodeling business. You narrow the choice to Here to Stay or Dream Home Corp. You assemble the following selected data. Assume all sales are on credit. Select income statement data for the current year is here. And selected balance sheet information is over here. Your investment strategy is to purchase the stock of a company that has a low price to earnings ratio but appears to be in good shape financially. Assuming that you analyzed all the other factors and your decision depends on the results of the ratio analysis to be performed. Right, so requirement, it says here, compute the following ratios for both companies for the current year and decide which company's stock better fits your investment strategy. So just as a quick aside, realize that this is the whole purpose behind this chapter. This problem and the next one are about, this is why you do financial statement analysis. Because you're going to invest in one company or the other. How do you tell which company to invest in? You have to, Here to Stay is apples and Dream Home Corp is oranges. How do you compare the two? By doing the ratio analysis and going through all of the ratios, you basically then are able to compare, bananas with bananas, all right, and you're able to make the correct investment decision. So I don't want to take a lot of time with this. I mean, if you've done all of the homework problems before, this should be relatively easy to do. It's just about crunching numbers, and I will try to, let's see here. I will try to write the numbers here next to the ratios. On the left-hand side, I'm going to put Here to Stay, and then Dream Home I'm going to put on the right-hand side as we create the different ratios. Now, I don't have too much space here, so you have to bear with that. All right, so for a quick ratio, we end up taking the Here to Stay. We're going to take the 12,000, the 11,000, and 28,000. That's 12, 11, and 28. And then that gives us what, 10, 11, 4, 51, right? So I'm going at 51, and I'm going to divide that by the total liabilities of 59. The current liabilities of 59, and that's going to give me equal to 0.86. So 0.86. And then for Dream Home, we have 13, 12. All right, I'm going to do it like this. I'm not going to actually end up doing a lot of numbers. I'm just going to pull the numbers plus 25, and that's going to all be over the 65 here. And that's going to give me 0.77. 0.77. Right, all right, maybe I'll do it this way also. I don't want to spend a lot of time here because all this is just, for me, it's a lot of math and number crunching. But to know where the numbers come from. All right, so Dream Home we're going to do in blue, and Here to Stay we're going to do in red. And I'm just going to pull the numbers. I'm going to rely upon you to do the math in order to get the correct information. Right. So for the debt ratio, we're taking the 75, and that's going to be over the 197 for the assets, and that gives me 38.07%. So 38.07, and for Dream Home, that's going to be the 74 and 189. So 74 over 189 is 39.15%. So 39.15%. Right, I'm going to erase this, so pause the video. Right, next is the interest coverage ratio. And for the interest coverage ratio, we have the 83 over the 13, which gives us 6.38. Now, if you're not understanding why I'm pulling these particular numbers, go back and look at the formulas in the book. Okay, so 63 over the 11 is 5.73. So I have 5.73, and I have 6.38. I'm going to erase this, so pause the video. All right, next is the accounts receivable turnover. Okay, so my accounts receivable turnover is my 395,000. It's 395,000, and that's going to be over the, let's see here. Let's see, where is I'm looking at average. So I'm looking for the average. I have 28. And, okay, so this was selected balance sheet data at the beginning of the year. Okay, so this is selected balance sheet data, balance sheet market price at the end of the year. So at the beginning of the year it was 29,000 plus the 28 and divide that by 2. And when you do all of the math for that, you end up with 13.86. And then for Dream Homes, we have 333, and that's over the 24 plus the 25. Divide that by 2, and that gives us 13.59. This is 13.59. So pause the video, I'm erasing this. Okay, so for inventory turnover, let's see here. I have my 155, and that's over 53 plus 60 divided by 2, gives me 2.74. So 2.74. And for Dream Home, that is 125, and that's going to be over 56 plus the 52 divided by 2, and that gives me 231. So it's 231. Pause the video. I'm erasing it. So yeah, this is just, you have to understand what the ratios mean. You have to also know what numbers to pull from. And like I said, go back and look at the, look for the formulas in the chapter, and then you can compare it to why I'm pulling these numbers. All right. Total asset turnover is going to be my 395 over 162 plus 197 divided by 2, and that gives me 2.20. And of course, if you're still not understanding why we're pulling these numbers, that means you have to go back and really work through all of the other assigned homework problems, because basically we're just doing the same thing. I mean, that's why, to me, this is just so mundane, because it's like I've done this how many times already, and as long as I understand all of the concepts, I know where to pull the numbers from, right? And then it's just I'm just doing the math. Okay. But realize, I'll pause the video here because I'm going to erase this. But realize that you shouldn't, you shouldn't just quickly just jump to the answers and look at the numbers for the ratio. It is important, so I'm going to now do return on assets. It is important that you do understand, okay, 43, and how to, where to pull these numbers from, okay? Because a lot of students, you can just look at the solutions and go, okay, this is what's on the paper. But when you actually have to do it yourself, when there's absolutely nothing and you don't have a solution, people go blank. And the reason why they go blank is because they haven't done the problems enough, right? Honestly, if you do the homework problems, you should have done these enough times to where you know where the numbers are coming from, so that when you are working on a blank page and you have to be figuring this stuff out yourself, you're able to pull the numbers that you need in order to be able to get the correct figures for the ratios. But you're not going to get that if you're not doing them. So even though this here is mundane and it seems like doing it again and again and again, it's the practice that allows you to be able to do it when you're looking at a blank page. All right, so pause the video. I'm going to erase this. And remember that doing these ratios is what allows you to be able to make, first you have to have the right numbers in order to be able to make the right decisions, in order to be able to analyze the information right. If your ratios are all wrong, well, even step back one step further. I mean, your journal entries, this is the entire textbook all rolled up in one. You have to start out with you start out with the transactions. You have to make the journal entries to be able to hit your books. You have to post them. You have to make sure all of that information is right on your financial statements, on your balance sheet, and your income statement. So if those numbers are right, then having those numbers being correct, you have to be able to correctly do the ratios. If you can't do the ratios correctly, or if you can't put the information on your books correctly, you're not coming up with right numbers, period, in order to make the best financial decision. By having correct information on your financial statements, then taking that correct information and correctly getting the right amounts for the ratios, that enables you to be able to look at that information and make the best investment decisions or answer whatever key questions that you're asking about that particular business. All right, so return on equity. This is 43 over, let's see, my return on equity is 122 and 79, okay, so over 79 plus 122, and that's over 2. It's an average also, 42.79%. And let's see, it's 49 over 115 plus 118 divided by 2. It's 4206. Okay, pause the video. I'm going to erase this. All right, earnings per share. Excuse me. Earnings per share is the 43 over let me see here. Over. Let me pull the correct number here.